Several major companies reported their earnings this morning, marking a significant start to the Q3 2025 earnings season with a strong showing from leading banks and several large-cap names. JP Morgan Chase reported Q3 2025 net income of $14.4 billion, EPS $5.07, ROTC 20%, and $47.1 billion in revenue, driven by markets and fees growth. Q4 guidance includes NII markets approximately $23.5 billion, total NII approximately $25 billion, and expenses approximately $24.5 billion. 2026 NII markets preliminary outlook is $95 billion. Credit remains stable, card net charge-off rate expected approximately 3.3% in 2025. Deposit growth slightly delayed but long-term outlook positive. AI-driven productivity gains expected to moderate expense growth. Wholesale credit mix evolving with slightly higher expected charge-offs. Regulatory environment shows bias for action with Basel III endgame progressing. Johnson & Johnson reported Q3 2025 sales of $24 billion plus 5.4%, net earnings of $5.2 billion, and raised full-year operational sales guidance to $93.2 billion plus 4.8 to 5.3%. Strong growth in oncology, immunology, and medtech announced planned separation of orthopedics. 2026 revenue growth expected to exceed 5% with EPS upside. Wells Fargo reported strong Q3 2025 results, net income up 9% year-over-year to $5.6 billion, EPS $1.66, revenue up 5%, ROTCE 15.2%. Asset cap lifted, enabling balance sheet growth and expansion in investment banking, credit cards, and auto. Medium-term ROTCE target raised to 17 to 18%. Full-year 2025 NII expected approximately $47.7 billion, expenses approximately $54.6 billion. Continued efficiency, credit quality, and capital return highlighted. The Goldman Sachs Group Inc. Goldman Sachs reported Q3 net revenues of $15.2 billion, EPS of $12.25, and ROE of 14.2%. Record M&A advisory, strong asset/wealth management growth, and robust fundraising. $100 billion alternatives expected for 2025. Optimistic outlook for investment banking and M&A through 2026. Launching One Goldman Sachs 3.0 to drive efficiency via AI. BlackRock Inc. reported record Q3 2025 results. AUM reached $13.5 trillion, net inflows were $205 billion, and organic base fee growth hit 10%. Growth was broad-based across ETFs, private markets, digital assets, and technology. Management expects continued strong momentum, low teens of G&A expense growth, and at least $375 million in Q4 share repurchases. Citigroup reported disciplined expense management, declining net interest income sensitivity, and strong credit quality in non-depository financial institution loans. The card portfolio is expanding, including the Barclays acquisition next year. Citi targets positive operating leverage and 10 to 11% ROE by 2026, with continued investment and operational efficiency driving future returns. Domino's Pizza's Q3 2025 saw strong U.S. growth driven by the Best Deal Ever promotion, Stuffed Crust launch, and DoorDash rollout. U.S. same-store sales rose 5.2% with 3% expected for 2025. Operating income grew 11.8%. The company plans 175 plus net new U.S. stores in 2025 and targets 3% U.S. comps in 2026 and beyond despite macro challenges. Market context. The early results showcased robust performance by U.S. banking giants with a particular spotlight on JP Morgan Chase and Citigroup for strong growth in earnings per share and revenue. Overall, analysts entered the season expecting positive surprises, especially across financials. Tech stocks saw early morning pressure in pre-market trading with weakness in names like Nvidia, Google, and Tesla as broader indices dipped.